The US Treasury bond market has fallen by 50% since 2020, making US Treasury bonds one of the worst performing financial assets of the past few years. In fact, never in the 250-year history of the US Republic have US Treasury returns fallen 4 years in a row. That's a big deal because falling Treasury prices drive up yields, increasing borrowing costs for the government, businesses, and consumers, which could slow economic growth. So the question now is, will this trend continue, and what happens if it does? You might have heard that President Trump is completely rethinking US trade ties with the rest of the world. That's caused a lot of other countries to reevaluate their relationship with the US and reconsider whether they want to stay invested in the world's largest economy going forward. For many countries, those investments are in US Treasury bonds, long considered the world's safest investment. In fact, 33% of outstanding US debt is foreign owned, as you can see in this breakdown. The financial sector accounts for 31% of US Treasury ownership, which includes banks, mutual funds, and hedge funds. The government and households own most of the rest, at 24% and 11% respectively. This chart shows how foreign ownership of US Treasuries has changed since 2002. The biggest foreign holder of US Treasuries is Japan, which owns over $1 trillion in US Treasuries. Next is China, with over $760 billion. But now, amid fraying trade ties and fading perception of US exceptionalism, those other countries might have an incentive to sell those bonds and look elsewhere. A massive foreign sell-off like this would be devastating for bond prices. That's because the price of bonds responds to the same basic forces as any other market: supply and demand. If everybody is selling and few are buying, demand falls and supply rises. Simple as that. We've never seen something like this happen before. In fact, we can see from this chart that the foreign holding of US Treasuries has actually been on the rise the past few years. But we did see a small contraction in Q4 2024. And this doesn't include the fallout from tariffs. So in the next month or two, we might see this number begin to go down in the fallout of hefty tariffs and diplomatic tension.